Stock market investing versus trading. Is there a difference? What is the difference? Are all the same? So that's the question that we're going to talk about today. So stay tuned till the end because I'll tell you what my thoughts are. Having said that, I'm not a financial advisor, but I have come to learn about all these things by myself and using online resources. So I want to make it easy for you to understand once and for all. So let's talk about investing in the stock market as it relates. Stock market investing, to me or most people in the industry, would be something where you put money in that usually is not leveraged, or if it's leveraged, it's very low leverage. Let's say you put in $100 and the broker gives you another 100, so it's 200, something like that. That's usually considered investing. Although generally, when I talk about investing, it's zero leverage. So when on this channel we talk about investing, almost always, unless otherwise mentioned, it is zero leverage. You put in $100 and that's all you have, not the other 100 that the broker will give you. Okay, that's number one. And investing is a long-term thing. You're not investing for tomorrow or next week or 2 years down the road. You're investing long-term. And what is long-term? Everybody has a different answer to that. 3 years, that's long-term for some people. 5 years is long-term for some people. But in my opinion, long-term is as many years as you can hold it. So that's when I say long-term, you're not looking to really sell out of it. You're kind of looking to just hold on to it and just grow with the company. I mean, if you imagine yourself being a small business owner or medium business owner, are you looking to every day waking up and saying, okay, what is the price of my company? And if I get this price, I want to sell. No, you go to your job, you do what you have to do to run your business, right? And so that's how investing is defined by me and a lot of other people in the stock market. Now, that doesn't mean that you don't ever sell, okay? That doesn't mean you always look to keep your stocks. Contrary to that belief, when you feel that things are changing with the company, you do want to exit and you want to sell. So that is, of course, that should go without saying, but a lot of people might get confused by saying that when I say investing is long-term, you hold forever. That's the ideal. That doesn't mean that it always happens. So that is, in a nutshell, investing. But let me go on to trading, and then we'll talk about what the difference is and what the similarities, how they're, what suits your personality, what would be considered quote unquote better, that sort of thing. So second thing about the first thing about trading is, trading is, by definition, in my opinion, it's a short-term thing. When I say short-term, you're looking to get in, you're looking to get out at hopefully a profit. Now, you could do this on the long side, or you could do this on the short side, meaning you can sell to open, that is short selling, so-called, or you can buy to open. That's most people, that's what we do, right? We buy, let's say Microsoft or the index to open up a position, right? That is trading. So trading comes in a variety of forms. I mean, it's not like one vanilla ice cream, okay? There's vanilla chocolate and strawberry, whatever flavors you have. Just like that, trading has many flavors. You can trade in stocks. You can trade, which is what most people associate with, that do not come from the stock market background or etc. There's also other things you can trade. There are so-called derivatives, which derive their value from an underlying stock or a company, right? Or something else, or a commodity, okay? What's a commodity? Like, for example, oil or gold, whatever, okay? So stocks, and then there's derivatives. Of derivatives, there's two types mainly that we consider. One is the options and the other one is the futures, okay? So these derivatives were actually created so that you can hedge your long positions. And when I say long, I mean the ones that you're holding in your investing portfolio, okay? So think of them as different buckets, and think of it investing as the long bucket, meaning that you're long, that you're for long term, okay? So yeah, think about it that way. And trading is traditionally used for hedging your long-term portfolio, okay? Because short-term volatility exists, as we all know, in the markets. And that's the reason why hedging was originally developed. All these contracts, so-called option contracts or futures contracts. Okay, so for we can think of it, we can summarize it this way: investing is where you buy something, usually long. That means you buy to open the position, and you want to hold on to it for a long time, maybe forever. Maybe you'll sell, but that's your idea going into the trade or into the position is to hold on to it, hopefully forever, thinking that it's a good company, index, what have you. That's investing. Now, trading is something that's generally used on derivatives, like for example options or futures, like we said, and that is for shorter term, a few months, few weeks, sometimes few days or hours or minutes. It all depends, right? So that's sort of like a gist of the main difference between investing and trading. And investing and trading, I do believe, are different. They have their own places where they click together, but by vastly they're in my mind, I try to keep them differently so that I can understand it better. So whatever works for you, you could follow that. That's the way I look at it. Again, not a financial advice, but that's the way I look at it. Now, coming down to what is better, there is no such thing as what is better, because it all comes down to who you are, what type of capital you have, and what type of things you want to do with it, right? So let's say you're somebody who's a person that wants to buy something and not be bothered about it, and you have your own life to worry about, things to do or take care of, kids, whatever, right? You don't want to be stuck in front of the screen. Investing is the place to go for you. Okay, you want passive income where you're not looking for doing sort of a job or a few hours a day. You don't want to do that. So that's investing for you. Is probably a thing for you, right? Now, let's say you are a type of person who wants to be more aggressive and you want to work some hours or maybe a whole day. I don't know. It all depends, right? Again, and how much capital also you have. So those determine whether you're a trader or an investor. In investing, it's a long-term game. It's not something that you're going to see results in short term. You're going to see yourself become wealthy over a long period of time, provided, again, you keep consistent, you go through the market cycles without becoming too hasty and making hasty decisions, and you stay focused on the long-term goal, not the short-term wins, right? So that investing is going to make you wealthy over a long term. Easiest way to do it would be through ETFs that are follow an index. NASDAQ ETF, S&P 500 ETF, whatever you have, right? Choose a few of them, diversify among them, keep investing through the tough and through the good times. Just keep investing and fix to a schedule of investing. Let's say you do it every week or every 2 weeks or every month. Do that, keep doing that for a long term, and you should see good results. Now, you're a little more adventurous investor. Now you can choose stocks, but I would say for a vast majority of people that are not fully aware of the companies that they're buying, or they do not have an edge, it's tough to beat the market, so-called, right? So if you can't beat them, they say join them, right? So that's one thing to remember when it comes to investing and trying to pick stocks individually. I don't want to confuse too many. I don't want to introduce. Let me put it that way. Too many things, because it might confuse people, especially new entrants to the market or people that are just learning about the markets. But those of you who are much more experienced, you guys know that there's other markets. For example, the primary market, where you can buy shares that have not IPO'd yet. That means hit the stock market yet, right? So that, I would say, investing in those is a little different, because you can have a little bit of an edge that most of the people in the world do not have. They might not even know that they can buy a certain company that has not come onto the stock market, but you do. So there's a little bit of an edge in the pre-IPO market. That's kind of like, we'll talk about that later some other time. I've already talked about one company that I think is very good, and you can find the link of that hopefully on the screen somewhere here. I'm still learning YouTube, so please excuse me on that. So coming to trading, trading is where you hear the horror stories, where people, put their house on mortgage and they lose everything. So you got to be really careful with trading, because it is by definition usually almost always levered. Okay, leveraged. That means you put in $10, the broker's going to give you another 50 or 40, whatever. So that's where you can actually lose more money than what you put in. In investing, the way I'm talking about, without leverage, with zero leverage, the maximum you can, let's say you put in $100, the maximum you can lose is 100. That's it. Assuming no leverage again. I want to underline that concept, right? In investing. But in trading, let's say you put in $100 and you're not careful, or your luck wasn't good, whatever you want to call it, you could lose much more than $100. And you see that happening. You go through social media. People that sell options are notorious, or futures. They notoriously lose humongous amounts of money, much more than what they have already put in. So then, by the way, this doesn't apply only to stock market. This applies to cryptos, whatever you're trading, whatever you're investing in, right? So that's one of the things that scares people away from trading. But if you do it responsibly, and if you do it, if you learn how to do it in a way that's very slow and steady and progressive as you see results, then it can actually not be the monster that you're thinking of. Okay, so that's one of the things I want you to take away from this, is that trading by definition is riskier than investing without leverage, but it doesn't have to be risky if you know what you're doing. The example I give is, if you know how to drive a Ferrari and you can drive it very well without getting into an accident, or without breaking laws of whatever the cops and stuff like that, then some people might say that's risky, but to you that's not, right? Because you know how to drive the Ferrari that can go from 0 to 60 in 2 seconds or whatever. So you know how to drive that, but other people might consider that risky. So trading is just like that. So if you know how to handle it, it's not as risky. If you don't know how to handle it, it can be very risky. It can be devastating. It can wreck your life in rare but real circumstances. So please be aware of that, and please be cognizant of that. So that's really the difference between investing and trading in a nutshell. There's a lot more differences, but if you wanted a very brief and this video before it's even cut is like 13 minutes. I don't want it to be too long. So I just wanted to give you an idea of what I mean by trading, investing, when it comes to my channel, at least. When it comes to this channel, Start Fact Zero, this is how I would refer to it. And investing, by definition, in my opinion, is where you're putting in your own money. No loans, no leverage, nothing, no brokers giving leverage. It's your own money. That's all you have. And so that's the way I define it. And I think that's a good way to look at it for most people, especially the people that are coming out that are not as experienced or savvy folks in trading or investing yet. So I hope that helps you. Let me know in the comments below what type of content you like to hear about, and we'll meet again soon.